Welcome to another Learning About Loans. So, Crystal and I actually, full disclosure, Crystal Miles here with me today. We just got done doing something else on A6, which is Texas cash out home equity laws. And we have something that is new to us, right? I think we've been working on it, or it's been I don't really know, but all I say, Crystal started talking about, I was like, hold on. So here's what we're talking about today. Texas A6 is a cash out home loan in
Mhm.
Texas, only on your primary property. And the laws are funky. The laws are different. I'm sure you can find any links around here that tells you more about them. But Crystal was just telling me about the how this little newfangled line of credit that's available is pretty slick. So Crystal, let's start with first and foremost, what is this thing called? I know it's a line of credit, but I think we have some fancy marketing name for it or whatever it is. Like
I
what what
mentioned
what program are we talking about?
it's called a Flex HELOC, which HELOCs in Texas are pretty hard to get. There's not a lot of lenders that do them. And so to be able to offer this is huge. And we literally launched it 2 weeks ago. But the cool thing about our program is it's a completely AI underwritten, very streamlined process. It literally takes me 10 minutes or you 10 minutes to the consumer 10 minutes to enter their information, and you have a pre-qualification in terms right away.
So let me restate that. Crystal's absolutely right. It is not common for quote normal mortgage bankers like us, like people who do mortgages. It's not normal for HELOCs. HELOCs are typically like we've referred a ton of business out to banks that we know, like, and trust. And we get nothing for it. We just know that they do a good job. So we get a lot of HELOCs and we've been able to do HELOCs. But this one's unique because of what you just said, which is it is super stupid fast. It is automated. And by the way, good and bad. We're going to talk about that in a second. But it is unlike anything I've ever seen or heard of at this moment, to where somebody can come in and within 10 minutes, they can put all their information in. Do they actually get like a yes or no right then and there in that 10 minutes? We're making up 10 minutes, but call it no time, right? So, 15 minutes or less, or whatever you want to say. But the reality is somebody can come in, put their information in their pajamas. Do they get a total like yes or no, or is it more like we think you're good? Like how's that process look right now?
I'd say 90% yes. It really depends. Like if you're a W-2 borrower with pretty traceable income through the IRS, because it pulls transcripts automatically. So it does a soft pull on credit, so it doesn't even ding your score to even find out if you are approved. A lot of times, if there's been recent sales in the neighborhood, it can pull an automated value, so you don't even have to get an appraisal most of the time. And so you can have an offer ready to accept within about 10 to 15 minutes, and then you can receive your money pretty quickly after that. You don't have to wait, 2 weeks or 30 days or anything like that. I think because Texas is just a fun place to lend, it might still be like a week, but it's a really streamlined process. Now, where it can get complicated, obviously, W2, but self-employed borrowers, people with a little more complicated income, it might take a little longer to pre-qualify them, but for the most part, it's a very streamlined process.
It's amazing. For many, many years, again, I've been doing this since 2003, so decades. There's always been the concern that technology is going to replace the loan officer and this, that, and the other. I still, even hearing this, I hope it does in this sense. Like for AI to replace the paperwork part of this process, great. You nor I mean, we do it and it's what we do for a living, but what a beating to do the paperwork. The reality is what we like doing, what we're good at, what we're great at doing is offering the advice and the consult to help you decide, is this the right option? Should you be doing this? But this program, freaking insane. And that, again, like your part, if there's going to be curveballs, that's going to take longer. But for the generic, here's what I need or want employee that has good, credit wise, you said soft pull, so they don't even do a hard pull on your credit, meaning it won't even show up as an inquiry. Um, this is incredible. So tell me this. Let's talk credits. So I just mentioned it. Is there a credit score? Like how do you know? And maybe it's maybe automated. A lot of times automated systems, it's just going to be the whole profile that they look at. But is there a limit to how low a credit score can go, or what? How do they make that credit determination?
Yeah, so it is a minimum 640 credit score, and it is pulled off of Experian. So if you have the Experian Boost, that's super helpful. If you don't, do that before you apply. And what Experian Boost is basically bringing in like utility payments, other stuff that you pay on time that doesn't report to credit. Experian's one of the few credit bureaus that actually takes that into consideration, and it can boost your score. But this program only uses the Experian score, and it just makes it a little easier to get qualified, so you don't have to use the middle score of three different bureaus who TransUnion might report a lot of crap.
So the Experian Boost, I'm not familiar with it. I've not done it. I've seen like, little logo and people like, but that's something as a just a normal consumer. I go get what is the boost? Is it just that they pull in that stuff on like automatically, or do I need to give them my rent payment, my cell phone bill, whatever it is? Like do you know enough to speak to that? And if you don't, that's okay. But do you know?
It's been a while since I've done it, but I think you might link your bank account so that it can see those payments being paid every month. But there is a way
Neat.
that they verify that. I'm just not sure because it's been a while since I've personally done it. But it's either, you upload statements or you do it through like your bank and they pick up those payments through that to see that you have those on-time payments every month. But it can be
Neat. All right,
rent,
so
it can be
just
utility
disclaimer.
bills, phone bills.
Yeah, disclaimer, Crystal and I don't work for Experian. So if you don't know this, there's three major credit bureaus, Experian, Equifax, and TransUnion. Like those are the three credit gods, if you will, in the mortgage world. So this one, to Crystal's point, Experian's the only one, this HELOC, they only look at the Experian, they're not normal. And you need a 640 or better from an Experian score. And we are saying the Experian Boost is not necessary, but if you think you're on the edge or you're not sure, get the Experian Boost and maybe you can do something there to increase your Experian score because that is the only credit score that they look at here. And again, this is not a hard inquiry, so it won't hurt your credit. Hard inquiries won't anyway to some degree with the mortgages, but that's neither here nor there. All right, so credit wise, we're good. Income, they got to qualify, but you mentioned that if you're like with a big employer, like a Lockheed Martin or a PepsiCo or something like that, they can probably just go directly to some source and get all that to determine it, which is why it's automated.
Yes.
If you're self-employed, commission-based bonus or something where it's close, that may require more paperwork, but that's something that the borrower, the homeowner, I assume they do that directly through the portal, correct? That's not something where you intervene, correct? That's a
No. Yeah, it's
okay.
all done through that portal. Yes.
Cool. How much? So in Texas, in A6, for those that don't know, Texas law says you can't get more than 80% of your home's value in total loans. So does this one go up to 80% loan to value as well, or is there a limitation on this?
Yes, it is 80% for most people, depending on your credit. I think if you're sub 680 or 660, I'd have to double check. But if you're under that, then it's a 70% loan to value.
Another good reason to go to Experian Boost and try to just see if you can maximize your score because it may have an impact as to how much you can borrow.
Exactly. And they
Um,
go back 12 months on payments. So if you've missed a payment, don't add that account.
Yeah, yeah. Don't do something that's going to hurt yourself, right? Don't shoot yourself in the foot.
Yes.
All right, you mentioned the value. A lot of times they can use automated values, which can be good if you live in, let's say, Dallas, Fort Worth, and Austin or Houston, where there's a lot of transactions going on. It can be relatively transparent to see that. I assume there's got to be instances if somebody's out in West Texas and they're, Seminole, Texas, and kind of out there, not a lot of transactions. What is there, will an appraisal ever be required, or is it just whatever the automated valuation gives you, it is what it is?
So I did one today and it actually asked for what's called a broker price opinion, which is something that you can get through an agent. There are trained agents that it's basically like a comparative market analysis, like you'd get to sell your home, but it takes it a little step further and has a little more data. Relocation companies use BPOs. So I haven't seen an instance where they've actually required an appraisal, but they have required a BPO if they didn't agree with the value that was input into the application.
And we will walk you through that. If a BPO is required, a broker's price opinion, we will help you walk through that. We're not just going to send you out in the wilderness all by yourself. So that's good to know. And as far as timing, we said again, approval can happen very quickly. Could be days, week, whatever it is. Whereas a quote normal bank HELOC could take 4 weeks. I've seen some where it could take six. So again, it could take a long time. So if somebody needs cash, this is a great way to do it very quickly. As far as everything else, so HELOCs again are different. They're typically second liens. I imagine this one has to be a second lien. I don't think they would
Yes.
take first lien position. It has to be a second lien.
No, we have
Up,
AIOs for that.
but yeah, yeah, we do have a product for. By the way, we do have a line of credit for that is a first lien, but it's not what we're talking about today.
No.
But in that it's a second lien. Do you know anything about closing costs? I have a guess of what it would be, but do you have any idea what closing costs are for something like this?
Yeah, so it is 2 points, which is 2% of the loan amount that you're getting. So, if it was $1,000, it's, $20. So it's 2 points, and then I think there's just some small other admin fees that are less than $1,000.
So in other words, on $100,000 line, if somebody says, I want to go get $100,000 line, 2 points is 2 grand. I would say, just to be completely transparent, in today's world, if you go to the bank or the credit union, you most likely, I'm guessing, can find something for less than the 2 points. I'm going to guess that you could find it for maybe even 0 points.
Mm,
Sometimes one, but there can be
I
instances
think
where you get zero.
HELOCs usually have 2 points across the board for most
But again, the
lenders.
difference may be, again, whether it's the fees, because sometimes they may charge, some banks will charge title policies, some won't. Do you know if we charge a title policy?
I don't believe so.
I don't think we do either. So it's one of those things where folks say, "Man, what if?" Look, at the end of the day, the reason why you do this one is super fast. First of all, let's take it there, super easy in terms of it just is going to decide, and if that works, it works. Now the problem is if it tells you no, if it doesn't like your value, doesn't like your home, doesn't like your income, Crystal, is there anything you and I can do on the mortgage side to say, "Hey, this has said no. Can we somehow escalate it or take it as another person? Can we do that? Because I've seen these before where it's like, no, it is what it is, and you're hosed. Can we fight this if we don't like the what they're giving us?
Yeah, it'll actually automatically offer something else if what you originally input didn't work. It'll still give you an offer if you're eligible for something. Now, at the end of the day, if it's not what you like or you don't like the overall terms, again, you can come back to us and we can reach out to our partner resources that we would work with on the regular HELOCs.
Yep. And so that's the part that I would just say that the benefit of this is you might as well. I mean, whatever information you're given this process, we would need or want for anybody else. So you might as well see what's available here. And if it works for you, terrific. If it doesn't, that's okay. We then take the next step and we were doing it anyway. So in other words, you're not adding work. It's just it's just step one. This is almost like becomes the new step one. Step one was, get information and we go shop it to other banks we know. And like you said, introduce them. Just to full disclosure, this one we do get paid on. The other one, when we send stuff to banks, we don't get paid on it, nor do I expect payment, by the way, because
No,
again,
but we care
technically we
more about our
could.
relationships.
In theory, yes, to be very, very clear, in theory, oh, not theory, reality, we could get paid by brokering these line of credits to other banks. So we've decided as a team, I don't want that. One, it's extra work for us, and the reality is it's extra cost to our buyers or to our borrowers, and we'd rather just send them to the right place to get the right loan. And it same goes for this one. The only difference is here because we're already helping get that information. This one we can at least say, hey, here's what it looks like so that we can use it to compare if needed, right? If this doesn't work or if it's not what we want or what we think could be something better else. Because this is the other part with banks and these line of credit, they come in and out of the market. Sometimes banks come in, they do a lot of them, they do them at really great, promos, and then they're out. And then 6 months later, they need it, and the banks come back in because they need to fill some sort of regulation requirement or they just have an appetite. They come in and out. So the benefit of having this is, like I said, it's just that extra why not? It's here. Anything else on this one that's unique or different that we haven't kind of hit on already?
No, just the fact that it's just a really easy, fast process. And, I did one earlier today on the phone with a borrower in 10 minutes and, got him a number and sent him the offer.
Boom. Easy peasy, look squeezy. I love it. The Flex HELOC, freaking awesome. Is that what it's called? The Flex one? Isn't that
Yep.
right? Flex?
Yep.
Love it. Crystal, you're incredible. Amazing. If you guys do need something, Crystal's incredible. I say this not this way. She's incredible, right? The head nods. I'm just like, she's incredible. She is incredible. I appreciate you, Miss Crystal, for making the time to talk to us today about the Flex HELOC. Thank you so
You're
much.
welcome.